Hello, everyone. Happy New Year's to you all. This is Avi Harkishin with AH Charts. Today is January 5th, Monday, January 5th. The time of this recording is 12:17 a.m. Eastern Time. I'm in New York. Pretty late here. I want to go over the indexes for the weekly forecast or analysis. So let's start with VIX. Last week I was looking at VIX as I was updating everybody in the Discord. Talked about this pattern that was forming here, which looks like a Wyckoff accumulation pattern. Well, we still want to see validation of this pattern. We did not see the entire validation of this pattern that was tracking, that was causing the move down in the market. So what happened is that we didn't get this entire move to the upside because you do have resistance around 14.85 to $16. Those are the key major resistance level that I'm looking at for VIX. Going into tomorrow, VIX is sitting at 1462, 1412, which is the last point of support, which is right over here. VIX has been kind of getting into this, which I call the last point of support. Within this area here, you kind of broke down, hit that bearish path that I've had before. And now you're right above there again, but you're seeing rejection as you're in that level over here, which is right over here. So you're still in that bear flag, which you got over here, and you broke down. So we can see another breakdown again on VIX if the entire market is going to rally. Give me a second here. Yeah, if the entire market is going to rally. So currently, what I'm looking at right now is to see a break above this key 1485 level. I want to see a break above that level. If not, and VIX continue to break 1412 support, you're going to come all the way back down to this bearish target here, which is 1318. Looking at it here, you're retesting this point of control here, and you're still bearish. So it's possible you see a breakdown to 1270. So a key level that I'm looking for going into this week is whether or not VIX is breaking above 1485 or VIX is continuing to trade within 1480, 1458 to 1412. That's the key levels that I have for VIX. You're still in a bear flag. You can always see a drop and bounce back to $16. That is possible. If you're holding 1485, I will be careful because you can see a spike on VIX to $16 level. That's for VIX. Let's move into SPY really fast. Okay, for SPY, SPY is still holding this point of control on the daily chart, which is right over here. As you can see, you're testing this point of control, but you're not breaking it, and you have the 50-day moving average over here. So as long as the range that you're currently trading in right now is that 691 to that 671, this is your range you're trading in. So you can see VIX correct the 671 move, which is wave 1, wave 2. This move here that you see to 671 is correcting this move that we had around December. Was that? It's sometime in December, maybe. Let me see. December 1st. That was this correction that you see here. So this could be like a wave 1 correcting this move, and this here could be a wave. This wave 2 is correcting this move. This wave 2 is correcting the 671 over here. And then you can continue to push to the upside. The bear case scenario is if you start breaking this 671, then you're putting in another low. And this here will be a support. This is the level where you don't want to break. If you break this level over here, this test here, which is around that 650 area, 644 area, then you're really in a bearish sequence and you're starting to correct the entire April move. If you start breaking here, you are correcting that April move right around this area, 640 or so. All right, so as of now, your trading range is 691 to 671. That's your trading range. You want to hold that 50-day moving average. So let's look at QQQ. Oh, by the way, you do have bearish MACD divergence and bearish RSI divergence, so you can see that clearly on the daily chart. Our key level going into tomorrow will be this Level where you have resistance at 686 on SPY, and you have 679 if you're trading this. If these are mostly for day traders, having key levels, you want to see that 679, 677 level hold, and you can possibly see rejection at 686 to 688 level. You're still in a bearish trend, that downtrend over here. So any move to the upside, you could possibly see rejection at 686.69. So just be careful of that. All right, and that's for SPY. Let's take a look at QQQ. Okay, here is QQQ. QQQ is in a symmetrical triangle, is compressing within a symmetrical triangle. The first thing that I notice here is the volume decreasing on the upside, and you have increasing volume as you're coming down. That's a warning sign for me to be careful of this. It doesn't mean you're going to break to the downside or anything. This here is just telling you when there's a reversal coming. And as you see, over here, volume is decreasing, and then you saw that rejection right over here, that shooting star rejection, and you retrace. So same thing as you're in a symmetrical triangle here is the same thing really as I just mentioned with SPY. This over here, this $600 level was correcting this low. This was your wave one correcting this low over here. And now this low is correcting this bottom over here to 600. So 610 was correcting $600 level. What you want to see, you continue to hold this level and break to the upside if you're bullish. One of the things that I've noticed is that on SPY you're trading above the daily point of control, whereas on QQQ you are trading below the daily point of control, and you do have that bearish divergence in MACD and bearish divergence in the RSI. I have noticed is that there is what you call an SMT divergence, bearish divergence. That tends to happen when one of the indices, such as SPY, is creating new highs, but you have another indice like QQQ or NASDAQ creating lower highs. That's a bearish divergence, something that you want to be careful with. So again, the trading range that you're looking at is 625 resistance and 610. That's level that you want to put in your chart. That's the range you are trading in. Any break above 625 and the next level is 629. Any break above 610 and you are the next level is $600 level. Those are your key level that you want to look at. If you start breaking this level here, this low right over here, you are correcting April. Right now, it's not showing you're correcting April, but if you break this level, you're most likely correcting the entire April move. Just pay attention. I am seeing weakness in the overall indexes. This is not a place you want to start opening a long position. Obviously, we can start moving to the upside to create a UTAD uptrust. Just before distribution, you start moving back down. We are in wave 5, an Elliott wave. So it's very tricky calling the top on a wave 5. So you can continue to see upside, creating a UTAD, and then break the downside, correct that entire April low. On QQQ, here, as you can see, so first of all, let's look at this chart here. When we corrected April, if you're doing your fib retracement, your pivot high to your pivot low, you're starting at your pivot high with your fib retracement, and you come all the way down to your pivot low, where April has bottomed. This was your top before April. This is your bottom. What you can see here is that you are hitting that 1.618 extension on your fib retracement where you're seeing resistance. Typical, it's normal. This is where you see retracement, you see resistance happening. So you're currently seeing that resistance happening at the top here. You're seeing some increased volume on the selling side. And the other thing that you're seeing, this is a caution area because when you start hitting this extension, you may start to see some retracement happening to correct this entire April. Not saying it's happening, just saying be careful of that, because if you start breaking below that symmetrical triangle on the daily chart, you may start seeing that entire April move correct. Now, the other thing you want to look at here is that you're hitting resistance on MACD right over here. you're hitting resistance here, you're hitting resistance here again. So you're at that resistance point where you can see some retracement. Um, doesn't mean you're happy, but you can start hitting that for a certain period of time, creating bearish divergences until you correct. Now you do have MACD curving to the downside. This is on the weekly chart we're referring to, and you're seeing that bearish divergence forming on the RSI as you're starting to probably break a little bit to the downside on that MACD resistance. So something to be careful with. Not calling any retracement here to correct this entire April move, but it's a warning sign to be careful because you have a few confluences here. You're hitting that 1.618 fib extension where you tend to see resistance. You are seeing some bearish divergences forming. You are at the top of resistance on MACD and RSI. So not a place you want to open long position or start swinging huge call options. Just be careful of that. Now, key levels going into this week or tomorrow is that you have support at 610, which was the last trading session that formed support where you bounced. You have resistance at 622 all the way up to 628. And you have a pivot level, a retest pivot level, which come from over here. So you can see price move back up towards that 618 level right over here. As price move back up to that 618 level, you can see price move up and reject to come back down and correct this 610 over here. And where you would see your correction happen is that you take your retracement tool and you start from the bottom here, and you just, a matter of fact, let me show you what that looks like on QQQ. If you're to correct, let's assuming we're in a bullish sequence, we're starting to break out, you will take your retracement tool from the bottom here, you move it back up here, and you will retrace back down towards that maybe 214 to 213 to correct here. So that's when you would probably have that move that comes up here, and you have that move that retrace back down to this area over here. So you could see something like this maybe going into this week or so if you're gonna move up and retest that pivot level at 618. So that will be my retest level if the market want to be a bit bullish. If the market really want to be bearish, the market will just come back over here and break more to the downside and test that 606 level or so. That would be a bearish case scenario. Okay, let's move back QQQ. So those are the key levels that you want to look for on QQQ that I'm looking for this week. Your trading range for QQQ this week is again at that 610 to 625. That's your entire trading range for this week. All right. Okay, now let's switch over to IWM. So for IWM, you've had your demand zone at the bottom here. You had your supply zone, broke out, came back, retest within the range, and now you're back up here. You do have a 243, let's just 0.73, let's just say 244, $244 range right over here. This one I'm taking this range from, which was a UTAD created, and you broke down. So this was a previous UTAD. Came back up again, retest this UTAD, and you broke down. So rejected here, here. You're back above this level here, this UTAD. And now your range that you're trading is that if you are correcting this bottom, this low over here, which is 228, you're coming back down. You can see a retest of 244. So this is the retest I see from over here, 244 area. If you start breaking below 244, your next level would be anywhere between 242 to 235, retesting that level. So I am seeing on the RSI, we're hitting resistance on RSI. We're also hitting resistance on MACD. You're seeing some selling volume as well. So just be careful. It doesn't say we can't go farther up. One of the things I'm looking at here is that you can see from this November 21st low that you have here, you have an A, a B, and either you have a C or your C will extend towards 242 to 235 to correct this entire November low. So just want to caution you of that. If you fail to hold this 244 level, if you break this 244 level on the daily, and you see a close on the daily below on high volume below 244 or 242, you are having an ABC that's correcting this November that will come down to probably this 235 area right over here. For now, you're holding that 50-day moving average in 244 area. So that will be your key support level going into this week or tomorrow. So mark those level 245, 244 area going into this week. That's your support. You want to see that level hold. You start breaking that level 244, 242, and you could possibly come down to 235 or so. Your trading range for this week is that let me get a better trading range for this week here for you. So your trading range for this week is that you want to see a hold of this 244.46 level, and your 250, 252, that's your resistance level going into this week. This is a level where you see selling right over here. You see rejection at 255 come down, and you might see another rejection here around that 252, 52 area. Most likely that 252 area or so, or 255. So this here is your key resistance level. Key support level is 244.46. So you can see you have that A, you have that B, and you have that C. But the C is not an equal leg. Equal leg. I'm going to show you what that really means in a moment. But you do have buying volume coming in here. Last trading session. So right now this is acting to support. So that's what I'm looking at in terms of key level. So this is your bear case scenario if you come back up here, and this is your A, B, C, and you're just forming one more rejection down towards this daily fair value gap or so. So there's a level I'm looking at going into this week. All right, let's look at a chart. So what I meant by a equal leg is that if I'm taking from this top, I'm not sure if this is like a fake wick or something, but assuming I'm going to take it from the top here. And you have your A, you have your B right over here. And the C wave tend to extend towards that extension one, which is 241.54 on this chart. So we never come back down here, but we did create a new low. So this was a C wave. So you can see us creating one more low, which this is going to be like another A, B, and C coming back down here towards this 241 or all the way down to 243, 245 area, closing out these daily gap over here. So you can still see this move play out, closing out these daily gap. So that's just the caution if the market sells off or not. So we'll see, because we haven't reached equal leg. We don't have to reach equal leg, but sometimes you'll tend to see we reaching that fib extension where wave A is equal to wave C. If we move the fib over here, assuming that was a fake wick, still haven't reached equal leg. Equal leg was around that 243 area or so. That's what I meant by equal leg. So you can still see that downside. You can still see some rejection up here and come back now and create a new low. Let's see what the overall market does. Don't want to forecast the market too much. Just know your key level going into tomorrow will be, for QQQ, will be that 245 area. You want to see that area hold support to 244.46. And 250 to 252 is your resistance area. If you start seeing resistance forming on your 5 minutes or so within that area, if you're day trading or scalp trading, you can see some rejection there. All right, that's all I have for today. Just want to go over the ETFs. Hopefully this was educational and helpful to anyone that's watching. All right, guys, take care. Have a wonderful trading week.